Hey, Cassius, can you hear me? What up? What up? Can y'all hear me? Let me know if y'all can hear me. Mic check 1 2 1 2. He said, "Yep, I bet." What's up, man? How y'all trading day been? How has your day been yet? Big Sam, big perm, big worm, big. I don't give a damn. How your trading day been? See, I'm probably about to exit this one because it looked like it's trying to do a full reversal. Like it might have bottomed out at 6,875. So that might have been the bottom right there. But what you want to do when you up on a position like this, the main thing you want to do is change that stop loss. See, I got in the trade right here. So, and if I press sell for it to go down and it go down this far, your stop loss should not still be up here. See what I'm saying? You got to move your stop loss all the way under where you got in the trade at to take profit, right? So now when I get out the trade, I get out the trade with that money that I'm making. Instead of getting out and losing money, I'm gonna get out profitable. You understand, Sam? Since you're the only one in here, this is why I don't go live in the daytime. This is why I don't go live in the daytime. It's only like 3 or 4 people that come to class in the daytime, but the night school, oh, my night school students, they listen, perfect attendance. Yeah, I'm on y'all ass, homeroom. Daytime is homeroom class, but they don't never show up. Steven said, I'm here for class. Okay, Steven. Like I said, man, I had my stop loss up here, and I did that because I said I got in about right here, and I said, okay, well, I'm going to put my stop loss above the recent swing high, and as soon as the price broke below where I got in the trade at, I took my stop loss and dragged it from up here and dragged it down to right here. You see what I'm saying? So now if the price do return back to all-time high, back towards the high, I can get out with that profit. See, I can take my stop loss and bring it down lower than that. I want to take profit. If it's on its way back up, I want to lock in that profit. Does that make sense, Steven? What I don't want to do is move my stop loss against me and put the stop loss somewhere where I'm going to lose more money because I'm afraid to get stopped out. See, people be afraid to get stopped out, so they'll move their stop loss and put it in an area where basically it's like having a security guard, and instead of you putting a security guard in front of you to protect you from danger, you moving them out the way. Every time danger comes, you moving the security guard out the way. That's equivalent to moving your stop loss out the way to try to avoid getting stopped out. Also, when you up this much, you go ahead and you see this. When you up this much, you go ahead and close it. You don't sit and wait but for me, I'm expecting more downside. See, it hit 6.9, it hit 69.21 and failed to break back above it like twice. So I'm assuming or predicting or speculating, shall I say, that it'll come back down. And if it doesn't, I'll get out profitable because I moved my stop loss here. So once it gets here, I'm getting out and I still made about $1,000. You still made about $1,000. Now see, a lot of people they get into futures trading and they trade futures and they end the trade. They scalpers. So what they do is they'll trade the 30-second clock. You see what I'm saying? They'll trade the 30-second time frame, 30-second chart, right? And so or they might be on a 15-second chart. Me, I like to see what the price is doing in a long term. See, I got in this trade early, like 6:30 this morning. You understand? This shit right here took place within the past. This took hours. I got in about right here. About 4, 5, but maybe about 6 o'clock. Yeah, about 6 o'clock this morning. It wasn't no 4 or 5 because I was still live during that time. Now, who in here don't know shit about trading futures, right? Tell me if you don't know shit about trading futures, so we can try to get you somewhat caught up. Somewhat caught up. Hold on, let me hook my camera up real quick, y'all. Give me a second. Pardon me. I'm a gigolo when I hit the flow. Where is my camera? There we go. Give me a second, y'all. I'm hooking my camera up. Go. Did you take any option plays for NVIDIA earnings? Yeah, Steven, I caught the downside. We bought NVIDIA puts the day after the earnings. You understand? I didn't get in before. I like to trade earnings. I trade earnings a little different than everybody else, Mr. Pack. I like to fuck with earnings after they already over, because it takes the uncertainty out of it. You know what I mean? I'm gonna move my stop loss. I'm gonna tighten it. Right, what we'll do is tighten it. We'll tighten it. If the price come up to here, I'm getting out profitable. I ain't got time. We're gonna walk away with what we got. It's all profit. It's all profit from here. But yeah, this was my stop though. Market been wild, Swan. Wild in a good way though. You know, we love the volatility. I'm finna show y'all how to enter a trade as soon as I get out of this one. We gonna go to a paper account because I ain't finna play with y'all. I ain't finna play with y'all. Hold on. Let me switch cameras real quick. There we go. There we go. Yeah, we in the building. All right, there we go. Let me fix the mic too. Hold on. 30. What's happening? There we go. All right, we good. All right, 30. Where you at, man? Broham, can you see my mouse? You ever did this in one day, Broham? Brodeen, you ever did this in one day? I know you have, but I'm talking about from trading. I know you have. I don't remember who the fuck I'm talking to. Boy, 30. 30 done seen 10 in a day. 20 in a day. Can't really see it, bro. Oh, you gonna have to zoom in or something. Yeah, zoom in or something, man. I can't use big screen because I can't use it full screen because then I can't see y'all comments. Stinky, you are not new to trading. That is not correct, pal. But it's okay. I'm going to talk to you as if you're new to trading since you said that. First, before I begin, I just want to make sure that my audio is clear. How good can y'all hear me? Can y'all hear me good? Is it skipping? Are we lagging? Or is it clear so I can go ahead and get on with the lesson? 6K. No, this is 19 is 1,950, but it's going down right now because this is going up. See what happened 30 is I predicted that it was going to come down, and it did come down. However, it is went halfway back up now, right? So yeah, but whenever you trade in this shit 30, you just basically saying whether you think it's gonna go up or down, bro. You just predicting whether you think it's gonna go up or down. You trading the future price of something, okay? So I got this trade. I'm gonna leave this open, and we're gonna open up another one. I'm going to look at let's look at gold real quick. So I'm gonna type in MGC because I'm trading micro gold. Okay, that's it, 30. It's just that fucking simple. You think it's going up, buddy, you press buy. You think it's going down, you press sell. Now the hard part is you know, risk management and not being greedy or not being scary. You know, scared money don't make no money, of course. But bro, why do you think I've been fucking hooked? He said that's fire. Yeah, I'm hooked. I'm you know, this is what I'm gonna be doing for the rest of my life. I'm not doing a 9-to-5 no more. I refuse to work a 9-to-5 unless it's gonna be me teaching. I'll teach. I'll treat that as a job. That's my 9-to-5, right? So let's practice my ability to teach. I want to see if I can make sure you guys leave this live stream today with some type of knowledge on how to do this shit, right? So I'm gonna give y'all a generational wealth building skill set if you have the power of execution, right? Which means you got to execute the information. See, a motherfucker can give you the knowledge on how to make $1 million. You still got to do it. Knowledge is not power. Knowledge is not power. Applied knowledge is power. Okay, so let's slow this shit down, and we're gonna build the right way. Let's slow it down. So first of all, what you're looking at is a candlestick chart. Okay, these candlesticks that you see, these rectangles, they are called candlesticks. All right, now I know a lot of y'all already know that, but I'm kind of more so speaking to my buddy 30, because you know what I'm saying, I want him to understand and overstand the simplicity of this shit. I need him to know that this is not rocket science, because a lot of us, if we knew better, we would do better. 30's already rich, but he could be richer. Okay, so look, this is how we're gonna do this, 30. Each candlestick is telling you something, Brody. It's telling you 4 pieces of information. I get 4 pieces of it. Let's use this big ass green candlestick right here as an example, right? So it's green. That tells me one thing, which means it went up. That means it started, green candlesticks start at the bottom and then they close at the top. So if you look at the bottom of this green candlestick and look all the way to the right side of this chart, there's numbers here. These numbers tell you the price of that commodity. See, I'm trading gold right here. At the top left, it says micro gold. I'm going to tell you about that in a second. But right now we trading gold. And at this moment, at 10 o'clock this morning, see, down here at the bottom, I got the date and the time. So I know when I put my mouse on one of these candlesticks, it's telling me the price that it was at that time. You understand? So now this tells me that gold was $5,157. What is it, per ounce? Somebody correct me if I'm right. Right? Am I right or wrong? Is it $5,000 an ounce right now? Either way it go, it's for one contract. You're gonna pay that much for one contract. So look, all right. So it opened here, and the price went all the way up during this 30 minutes of time. Because we on a 30-minute chart, right? You see how it say 30 minutes right here? That means each candlestick represents 30 minutes of time. You see what I'm saying? So this is 9:30, this is 10, 10:30, 11, 11:30. You see what I'm saying? Each candlestick represents 30 minutes of time. So within this 30 minutes, the price of gold went up from about 5,157 all the way up to 5,210. And see, and when it got to 5,210, it came back down and it closed right here at 5,202. And then when the next 30 minutes came, it opened up right here and it went down, which is why this candlestick is red, because red candlesticks show you that the price went down. You see what I'm saying? So the price opened up here and it went down to this price. And then the next candlestick opened, right? So now you know what the opening and the closes mean. Let me explain these skinny parts that's popping out of the rectangles. Those are showing you how high and how low the price went. See, on this green candlestick, you notice that there's a very small wick on the bottom of this green one, but there's a longer wick on the top side, which is telling me that, okay, the price opened right here. It went down just a little bit. Then it shot all the way up, and then it went down some more, and it closed right there. Each candlestick is telling you where the price was at when it opened, where how high it went, how low it went, and where it was at when it closed. So this is how we keep track of the price. Now I can go here, 30. I can come over here to a 1 month time frame, and I can look at what the price of gold has done over the past month. What I'm looking to do is to find a pattern and to determine where it is about to go using where it has came from. Okay, that's pretty much it in a nutshell. I can also come and look at the previous patterns, right? This is called back testing. But what I'll do is I'll come here and I'll draw on this chart to try to see if I can see a pattern. I notice it's going up the stairs right now, right? It's going in an upwards direction. So I guess I could say that I think it'll keep going up. And the moment I think it'll go down is if it breaks below this red trend line, right? So I'm building some form of a thesis. I'm not just getting in anywhere, right? We want to find a pattern. I'm not just getting in anywhere. So a lot of beginners hear the word futures. Let me start over. A lot of people hear the word futures, 30, because this ain't the stock market. This is trading futures right here. This is a little bit different. Now, they immediately hear futures and they think that this shit mean fast money. That's not the case. That's a dangerous mindset to think that you can get in this shit and make fast money. This is not necessarily a get rich quick vehicle, right? Futures are simply a contract. So I'm gonna slow it down. What is a future? A future is a contract. A contract is a binding agreement between two parties, you and someone else, right? Between two parties to buy or sell something at a specific price at a future date. That's all it is. That's it. There's no mystery. I'm gonna say it again for the people in the back. Futures are a contract. It's a binding agreement between two parties to buy or sell something at a specific price at a future date. Okay? So, originally this had nothing to do with futures trading, like sitting at a computer like I'm doing right now, right? In the beginning, when people was trading futures, bruh, it wasn't on a computer. It was farmers. Farmers traded futures. Airlines use futures. You got oil companies that used futures. Go watch the movie with Eddie Murphy called Trading Places. It's a funny ass movie, 30, and it'll give you an introduction into what futures is. You know what I'm saying? Now, a farmer growing corn don't know what the corn prices is gonna be in 6 months. So he lock in a price today using a futures contract. Now his business becomes predictable instead of uncertain, because he know, and this what I see my price is in 6 months. Now you got speculators, which are traders, right? They came later, right? We stepped in and realized if the price is gonna move between now and the future, we could trade that movement. You see what I'm saying? So futures literally became tradable. But the DNA of futures is still literally about managing risk. That's all this shit is about. It's risk management. It's not about chasing excitement. So when you trade in futures, what you are actually trading is gold, oil, you see what I'm saying? Copper, silver. You might trade the NASDAQ, you might trade SPY. See, when I say NASDAQ and SPY and y'all think about the stock market, these are stock market related futures, right? ETF related futures. Because you got crypto related futures. You could trade the future price of just about damn near anything. Not anything, but it's a lot of shit you could trade the future price of. And it's not like the stock market. There isn't, you're not dealing with all the shit that you would have to deal with when you're trading in the stock market. Now, you're not buying the asset. You're not buying literally pieces of gold. You are trading the price agreement, okay? You are trading the movement of expectation. You trading where the market think the price gonna be in the future. That's why futures usually move before the stock market even open. And you could trade futures 23 hours a day, right? The stock market closed right now, and here we are looking at futures. I think I got stopped out. Yeah, I got stopped out. But it's cool. We made the money. We're gonna enter into another trade. I'm gonna do that right here in front of y'all, but first I want to explain a few things before I do. Futures are something called leverage. Okay, leverage just means control without full ownership. Stopped out 30. Stopped out mean I said that the price was going to go down, and if it's okay, let me give you an example real quick. If I say the price finna go down, let's say I get in the trade right here, and this is where I get in at. We're gonna make it blue. So that's where we enter the trade at right there, right? Now let's say I think it's about to go down, and I'm gonna show you where I think it's gonna go, right? We got in the trade about right here. And I can say I think it's finna go all the way down to here. So the green area is where I think it's about to go down to 30. The red area is the stop out area, which means if the price goes up to here, get me the fuck out the trade. Okay? Get me out of the trade. If the price comes up here, I was wrong. This is going to keep you from losing your money. See what I'm saying? I don't have to lose, bruh. This is like you. All right, so I know you sports bet, right? You know what a cash out is. A stop out is kind of like the equivalence of a cash out when you sports betting and you was wrong and you about to be wrong and they just go ahead and let you out the trade with some of your money. That's what a stop loss is. Hey, Miss Crystal, how you doing? But you don't have to lose. See, in sports betting, that cash out feature, that shit ain't gonna be sitting there the whole time. You only got a small window to cash out when you sports betting. When you trade in stock options or futures 30, you can get out of the trade at any moment. You don't have it's like a cash out button that just sit there waiting on you to get the fuck out if you wrong. Or get the fuck out if you right. Either way it go, you choose how long you stay in the trade. You choose how much you lose. Now it sounds dope 30, but you will be amazed how many people don't use a stop loss 30. They just get in the trade, right? So they money is tied up into this shit. And what happens is the price goes against them and they end up losing more money than what they could afford to lose. You see, they'll put 5,000 into their account. Like, okay, I'm about to grow this shit to 25K real quick, which is super possible. But not if you're going to be taking big ass losses and shit. See, Stinky says that he don't use stops, but I'm going to tell you why Stinky don't use stop losses. Stinky Pinky don't use stop losses because Stinky know how to get the fuck out the trade whenever the price is at a level he don't like it at. Stinky, tell me if I'm wrong. You don't use an automatic stop loss, but you use a manual stop loss. You get out the trade at a certain level when you're wrong. Am I right or wrong? Do you just stay in a losing trade, or do you get out when you are invalidated? That's right. Now, I do not recommend that you guys use the mental stop like Stinky just said. Don't use a mental stop because Stinky been in the game. When I was wearing diapers, Stinky was trading. See what I'm saying? So you can't use mental stops unless you know what the hell you doing. A mental stop is I am going to get out of the trade manually, 30. That means I'm just going to get out the trade. How do you get out the trade? If I thought it was going down, I press sell. So in order for me to get out, I got to press buy. If I thought it was going up, I pressed buy. So in order for me to get out, I got to press sell. So basically, a mental stop is instead of me putting the automatic sell order right here to get me out the trade, I'm just going to press sell to get myself out the trade. But a lot of people don't press sell. It's you versus you in this shit. And you going to be your worst enemy. You're going to be your worst enemy. All right, so let's go ahead and before I enter the trade, I have to explain what all this shit mean, right? So this is why futures move so fast. Futures are leveraged. I keep telling y'all that leverage means control without you really having the full ownership. So you don't need $500,000 to control the S&P 500. You just need margin, right? I know y'all like, what the hell is margin? Let's talk about it. Hold on, let's talk about it. me see if I can. Let's find. Let's add a widget. Is it quotes? Do I want quotes? Okay, yeah, this is what I want right here. This is what I want right here. Let's add quotes. We're going to pin it. All right, so look, check this out. Let me explain something to you. All right, so let me see. Let me type it in the right one. Is y'all gonna let me change it? Oh, this might not even be the right one. Hold on. So you go here to add a widget, and you want to add. I'm looking for the information. On the commodity that I'm trading. I'm tripping. There you go. Ooh, it must be nap time for me, buddy. Remove quotes. All right, here we go. So I'm gonna come here and I'm gonna type in ES. This is the E-mini SN. This is the E-mini S&P 500. All right. So let me explain something to you. You need margin to trade futures. For those that don't know, you need margin. Margin is basically a performance deposit. Think of it like putting down a security deposit to control something a lot bigger. Okay. This is where a lot of beginners get emotional because leverage amplifies your skill, but it also amplifies stupidity. Let me explain something to you. Where is it? Where's the? You see how it says initial margin, 26,596, and then it says maintenance margin, 24,000. This is how much you need in your account to trade it. It says minimum fluctuation, 0.25. That means that this shit moving 25 cents at a time. But guess what happens, 30? Every time this shit go up 25 cents, you make $12 and some change. So if it go up 50 cents, you made $25. If it go up a whole dollar, you made $50 off of a $1 move. You see this? Look at this price. You see how it's moving in quarters? It went 6,921.50 and it'll move by quarters. Every time it go up a fucking quarter, you make $12. Every time it go down a quarter, you lose $12. Every time it go up a whole dollar, you made a 50 ball off one contract. But not with the micros though. He said my mic went out. Okay, hold on. Mic check 1 2. You need big money to trade minis though. That's right. Can y'all hear me still? That's why I trade the micros. All right, look at the micro. Clear. Okay, so with the micro, the initial margin is $2,000. The maintenance margin is $2,400 instead of $2,600. If I want to take a day trade, I don't need to have as much as I would have to have if I wanted to trade the minis. I could trade the micros. You understand? So, again, a good decision can become powerful when you trade in futures. A bad decision can become expensive, right? So beginners think that futures are about prediction. It's not. This shit is not about prediction. It's not about me predicting where I think the price is about to go. Okay? I'm gonna close I can't even close. The market's still open. Yes, it is. So this is a Coinbase call. Coinbase $400 call, up 32% on the Coinbase. I want you to, if you downloaded Robinhood like I told you to, I want you to go to Coinbase. That's where everybody buy crypto. Go to Coinbase, put it on like a 6-month chart. I want you to tell me what was the highest price Coinbase was in the past 6 months or a year. And I want you to look at where it's at now. Okay? And in the future, I'm gonna tell you, hey, when Coinbase is back at all-time highs again, I'm gonna tell you this is why you should have fucking invested. And this is for educational purposes only. You know what I'm saying? Coinbase is a stock, a company, right? Coin is a stock, but it's the stock of a company called Coinbase where people buy crypto at. Got to re-download on new form. Makes sense. So yeah, people buy crypto. Not all the time, not everybody, but yeah, Coinbase got a big customer base. I don't see them being down this low for long. But anyways, back to the futures. So futures is not about predicting. They think that the goal is, you got to guess where the price is going, and that is not the case, ladies and gentlemen. That's not the case. Hold on, let me see something else too. There we go. That's called a trend line. I got you, bro. No doubt. No doubt, 30. When you ready, I will pull up, bro, at the crib, bro. You stay like an hour from me, nigga. I'll pull up and I will show you piece by piece exactly how to do this shit hands on. You feel me? Because it's not complicated. And I know that, if we knew better, we would do better. I know that. I know that to be true. So look, professional people that do this, they not obsessed with being right. It's okay. You can be right and still lose money. You could be right and still lose money. You could be wrong and still protect the capital too. Like Stinky said, remember the trend is your friend. Right. So for me, I want to see this price break outside of this trend. If it break outside of this trend, I'm happy. But for now, it's making lower highs. It's making look like higher lows. Yeah. Which is creating a wedge. Every time it drop down low, it's dropping lower than it was before. Every time it come up high, it's coming up higher, lower than it was before. So that's called a lower high. If it came up and it was higher than it was before, that's called a higher high. If it dropped down lower than it fell before, that's a lower low. Right now it's making higher lows and lower highs. Instead of, see right here, it was making higher highs and higher lows. That's an uptrend. Right here, it was making lower highs and lower lows. That's a downtrend. Indian Soul says, so if I understand, you're creating a buy/sell order in advance. I'm predetermining what all of that is going to be. But when I do it, I'm not creating it in advance. I can, Indian Soul, that's called using a limit order, right? I can create the order in advance using a limit order, and the order will be queued up, right? Now check it out. So you don't start trading crude oil or natural gas when you first start trading futures, okay? They move like wild animals. That's like trying to wrestle. You trying to wrestle a gorilla and you just learned how to wrestle. You need to start with the minis. Actually, the micros, not the minis, excuse me. You need to start with the micros. Micro gold, micro NASDAQ, micro ES, MES, which is the micro S&P 500, because they move with some sort of structure, okay? And they respond to liquidity. Liquidity is money flowing in and out the market, okay? So now they respect levels. I love micro futures. MES and MNQ, same behavior. Look, I'm gonna look at MNQ. Oh, what did I do? Yeah, here we go. MNQ. Here go the micro E-mini NASDAQ. This one right here pretty much tracks technology. Okay, so I'm not trading futures for fun. We're not doing this shit for fun. We're doing it for a profit. So we pay attention. I'm teaching y'all patience, risk control, expectation versus reality, emotional regulation. I'm not here to tell you which direction to go in. I'm not here to say, okay, now press buy. Okay, now press sell. See, this is going to expose psychology even faster than options will. It's a mirror. It's gonna show you, like, if you impulsive, futures gonna put belt to your ass. If you don't got no discipline, it will expose that. If you respect risk, then you will be rewarded over time. So because you know how to manage it, I'm telling you, this is no different than going to the damn casino and you don't know what that ball finna land on when you playing roulette, right? You at the roulette table. You don't know where it's finna land on. So what you need to pay attention to is your risk. How much are you risking? You went to the casino with $1,000. Are you about to put the whole 1,000 on that? All you got is 1,000. You about to put that shit all on one hand? Wow. Hell, even if you put half of it on one hand, you fucking up. Now, the goal is not to master futures, ladies and gentlemen. The goal is to master decision making under pressure. You understand the difference? Some people trade futures, but they haven't mastered the decision making under pressure part. See, once somebody learn that, they can trade anything. Stocks, options, Forex, it don't matter. You hear me? Put a W in the chat if y'all listening. I need to make sure y'all engaged. Where my engagers at? We got a small class today. It's only about 25 people there anyways. Yeah, the price don't matter. The behavior matters. So futures is one of the fastest teachers that the market has. All right, so let's go. We're gonna learn about tick sizes. We're gonna learn about tick sizes. I want to explain everything that I can before this appointment come up, and I gotta let y'all go. So now I'm gonna build the part that make this shit real for y'all. Oh, you welcome, Hector. You welcome. So beginners do not lose money from the charts, ladies and gentlemen. They lose money because they don't understand how the money move. You got to know how this money moves. So in stocks, people think in dollars, right? If this was in the stock market, you would be thinking in dollars. You would think, okay, this has to go up $1 at a time. In futures, the price moves in ticks. Okay? And when you trade in stock options, that delta is gonna change based on the dollar. I mean, yeah, it go up 1 penny at a time, but I'm looking at, I'm buying my strike prices. They might be 50 cents apart, but for the most part, you buying them strike prices, they $1 apart from each other. In futures, we thinking about ticks. Look at this price right here, y'all. Keep y'all eyes on this price. I want you to pay attention to how it's moving. I'm showing you this for a reason. I want you to look at how it's moving and how it only moves 25 cents at a time. Watch it so that you can understand what I'm teaching you right now. Because if you can get this, then you learn something today and you that much closer to being able to trade futures. A tick is the smallest movement price can make. That's what a tick is. A tick is the smallest movement price can make. So not every market is going to move the same. Do you understand? So this one is moving 25 cents at a time. That's 25 cents. That's one tick. So if it moved 4 ticks, it went up $1. If it went down 4 ticks, it went down $1. Okay? Now, since we looking at this ES, this is the micro ES. We're going to look at just the regular ES, which is the E-mini S&P 500. Okay? On this, it moves in 25 cent increments. Each time it go up 25 cent or down 25 cent, you make $12.50 or you lose $12. And if it go up 25 cents, you made $12.50. If it go down 25 cents, you lost $12.50. Hector says, how do I earn 100 in NQ if I am in for a buy? You press buy, Hector, and if the price actually goes up, what we need? About 8 ticks. You need about 8 ticks. Because I know off of 4 ticks, that's your 50 ball. And then it also depends on what you trading, Hector. It could be more than that. It could be less than that. You got to keep that in mind too, because it depends on what you trading. Now you either gonna gain with this E-mini S&P, you either gonna gain $12 or lose $12.50. Not per trade. I'm talking about per movement, per contract. So if the price moves just 1 full point, which is 4 ticks, that's $50. Okay, a beginner will hear that and they get excited, but let's flip the mirror. Let's look at the other side of the coin. It's always 2 sides, you know what I'm saying, to a story. So that same move can happen against you just as easily as it can help you. It can hurt you. This is why the micros exist, right? We're gonna go to the micro. This is the E-mini S&P. Now we about to look at the micro S&P. See, this is the micro S&P. This is the micro version of SPY that we was just looking at. The mini. This is the micro version of the mini. So when you trade an ES, which is the mini, if you want to trade the poor man's version, put the M in front of it. That's the MES. I don't want to call it the poor man's version because I know we're not fucking poor, but y'all know what I mean. The affordable version, right? So it's the same exact behavior. It's the same chart. Nothing changed. The only thing changed is the tick value. Same movement, except now 1 tick equals $1.25 instead of $12.50. So that changes everything psychologically, right? When you get in the trade now, it's when it go up, you make $1.25, and when it go down, you lose $1.25. You see what I'm saying, Hector? 30, you still with me? So now you can learn without having that emotional panic behind it. Instead of being down $200 in a couple of seconds, you might only be down $20. You see what I'm saying? So that's going to allow you to think instead of reacting to this shit when you first start. When you first get started, Chief, what up? When you first get started, you don't want to be losing $200 in a couple of seconds, man. Hell no. You know, you're going to be mad at me. Like, oh, this shit a scam. I'm telling you now, your ass, listen closely, because it ain't going to be my fault, y'all. Be careful. Manage your risk. Learn how to do this shit first before you just throw money into it. There's something called paper trading. Let me show y'all something. You can get on here and trade with money with money you ain't got. You better put $1 million on this motherfucker if you want to, but be realistic. Put however much you're gonna trade with in real life on here, and you will be able to, you could trade it. Look at this, look. You can come in here with this and trade this shit like you got that much in there and practice. You can practice. It's called paper trading, 30 and Hector. All right, paper trade futures first. You can trade the stock market all you want. You want to learn futures, practice it. All right, this is what's going to create skill for you when you do that, okay? Now, let's say you buy one MES contract. Let's say you buy one MES contract right here, micro, E-mini S&P, and just real quick, okay? So let's just say let's say we think it's finna keep coming down. This says MNQ though. I need that MES. Let's say we think it's finna keep coming down. Let me take this off. Actually, no, I'm gonna leave this here. We're gonna fix the parameters because I say we're gonna get in about right here. I'll actually get in the trade. Fuck it. Let's say, so I'll come here and I'll say I want one contract, and I'm gonna make it a market order because right here it says sell one market. But I'm gonna also put the stop loss on, and I'm gonna put the take profit on. So this is a bracket order. Soon as I get in this trade, it's going to automatically put my stop loss there, my take profit there. You see what I'm saying? And you're gonna be able to see where I got in the trade at, right? All at once. I can also come here and say, click on this eye. When you run your mouse over these little eyes, it give you information. The price to be filled by floating upwards on the price of the main order. See, this is gonna complicate you. It's gonna confuse you. But yeah, what you don't understand, take your time and go Google some of these words if you've never heard them before. But anyways, you see how I can come here and change this from tick to percentage to dollar. I can say, okay, I want to only risk 1%. And I can say I want to take profit once it gets to 3%. And there's my 1 to 3 risk to reward ratio. And then I can just come here and say sell 1 at the market price. I got my stop loss and my take profit automatically there. In the order of get filled, got 1. But it's not even lighting up. Oh, because of the time. Okay, cool. Is this trading view? No, this is Webull. How do you draw that block? What block you talking about, Hector? What block you talking about? You can come here and just click on how many contracts you want. Stop loss in 3 to 1. Up here. Up here, go to your toolbox, your drawings. And then you come where these little 2 buttons at, these 2, because when you click on there, it'll open and close that tab. I want to open it. I'll come here, go to this little drop down arrow, and it's going to give you a few options, 9 options to choose between, right? Each one do different things, of course. This is the long position. This is for if I'm pressing buy. This is for if I'm pressing sell. So let's say I got in the trade here, and I'm predicting for it to go here, and I want to. This is as much as I'm willing to lose. I'm only willing to risk 0.10%. So if the candlesticks go inside that red area, let's even go down into a smaller time frame, 15-minute time frame. If the candlesticks do anything other than go into this green shaded area, gets me out the trade. And I'm gonna show you what to do in the middle of the trade, right? So you in this trade, you got in, you see it's going up against you, but when it get to the top up here, it kick you out. I'm only gonna lose. I won't even lose a full 1%. I won't even lose a full 1%. It's just simple. You welcome, Hector. So look, let me see. Where was I at? So look, y'all know now about the multiply behavior. So if somebody traded 5 contracts, switch to your futures. That's why I wasn't doing that. I got it. I'm like, what the hell going on? Boom. There we go. So if somebody got 5 contracts, right? I got my stop loss. I got my take profit. I don't want to do it by ticks. I want to do it by percentage. That's just me, because I that way I know I'm doing a 1 to 3. I don't have to wonder. I'm gonna sell 5 at the market price, and it'll have my stop loss and my take profit automatically sitting there. But I kind of want to wait, because now I ain't in that trade. I can wait and see how this finna play out, because obviously it's hitting this wall, this level of resistance, and it's not breaking above this level. It did a couple times, but I want to see it actually break above it and close. But that is a 15-minute chart. This is a 5-minute chart. This is a 1-minute chart. The reason why I want to come down to a smaller time frame is so that I can find a better entry. I'm looking for a better spot to get in at so that I don't get in at the wrong level. Because remember, you looking for a pattern. Right now, this shit look like it's going up. And then it looked like it pretty much stopped about right here. Right? Of course, it came all the way up to here. But I'm looking at the body of the candlesticks. That's what I want to look at. You can use the wicks if you want. Me personally, it ain't enough validity in it for me. I like using the bodies. So I really want to wait for the price to come up here, but fuck that. I'm teaching. I'm just about to just get in it just to show you what I mean. So now I'm in the trade. So I got in the trade. You look over here to the bottom left, you can see how much it says open P&L. That's how much money you making or losing in real time. Okay. So you see it's going between $6 and $0, then up $6, then $0, because this is where I got in at. Here's my stop loss. If the price comes up here, it'll kick me out. If the price comes down here, it'll kick me out, but I'll be profitable. Now, this is why I put that short position there, so I can honestly, I want to be able to see. And I know I got in the trade here. All right, I got in the trade here at 69.1875. Right. The price is in the green, which means I'm in the right area. I got my stop loss all the way up here, but we want to make that. We're going to make that stop loss tighter than that, y'all. So I'm going to take my stop loss and drag it all the way down to where I'm only losing this much. And then my take profit order is way down here. That means that if the price goes down there, I'm taking profit. Right here. This is my take profit level. 67.11. Which is 3%. Because I'm risking 1 to make 3. Right? I'm risking 1% to make 3. Realistically, I would get out about right here. So I don't need a full 3%. I'm not chasing 3%, right? So if it gives me what I want, I'm cool. I'm already up $62. Hey, where can you make $68 in that short amount of time? Can anybody in the chat tell me? Where could you make that amount of money in that amount of time? I'll wait. I'll wait. You can lose that much too now. Don't get it wrong. I wanted to show y'all that you can lose it too. You can lose it too, but I'm sitting on my ass right now. I only had to pay attention and I only had to spend time. That's all I had to do. That's all you got to do is pay attention and spend some time towards learning. That's it. Would you rather do that or have a supervisor on your ass all the time? Or would you rather put your money somewhere where you could leverage it or spend it and blow it? Now, all this talking and shit, you can talk, but if you don't close that trade, you didn't actually make shit. It was called unrealized gains. See, you got realized gains and unrealized gains. Realized gains is when you actually close the trade. You got realized losses and unrealized losses. So this could have been down -37 and I still wouldn't fucking close it if it don't hit my stop loss because I have a strategy and I have a plan, a predetermined stop loss, meaning I was already prepared to lose this amount. But let me show y'all something while I'm talking. I'm going to take my stop loss and drag it down now under where I got in the trade at. Can anybody tell me why I just did that? Why did I just drag my stop loss down under to where I got in the trade at? You got to understand that from here, it is all profit. Not necessarily to make more, but to take the shit off the table. Charlie hustled to be close to break even because I have the stop loss below where I got in at. So technically, I'm getting out with some profit. It'd be a little more than break even. But if I get stopped out, whoop-dee-doo. I walked away with some money on. Whoop-dee-doo. The lower it goes, the more I'm going to lower my stop. The lower it goes, the more I'm going to take off the table, Charlie Hustle. Put a W in the chat if y'all understand what I'm saying. I only see 4 fucking followers. I got a problem with that now. It's been 700 people coming here. See, I got kicked out the trade, but I got kicked out profitable. I got kicked out with over $60 instead of being in that trade and then watching it go in the complete opposite. Now I'll get back in. Look, I'll reposition. I will reposition. Look, I'm back in. I'm back in. I'm going to reposition. Look. Stop loss up here again. Take profit. A little bit more realistic. But if I get stopped out, let's put the stop where it really is. My entry is about right here, and the stop is about right here. I can get stopped out real quick and get that shit right back. Hold on, let me see some orders. Filled, canceled, working, cancel. So now the order never got filled. The order, if you come here and your order says working and it's not in the field box, if it's working, it'll be here. If it's working, you can cancel it, close it, whatever. If you go to positions and you don't see it, it never got filled, right? And you can cancel it before it gets filled, or you can close it after it gets filled. You understand? Basically, filled means you got in the trade after you get in the trade. So once you get stopped out, what you want to do is not give the fucking money back. See, if I keep getting into the trades, being greedy, oh, I'm gonna get back in. I'm finna get back in. That can give them back the money. You basically getting caught with your hand in the cookie jar at that point. Yeah, at that point, you getting caught with your hand in the cookie jar. Now, I just showed y'all how we was inside of we took 5 contracts, right? We took 5 contracts. Each tick mattered even more. That same 10 tick move that we just traded on the micro made us $62. This is where your ego gonna creep in, because you start to size up before you skill up. You will size up before you skill up. You gonna say, damn, if I could do that, let me buy the shit. Mother come in here and say, let me get 20 contracts. Because you seen it do that, and it's just greedy. TikTok, what are you talking about? Why do I got to do a puzzle? Why is it a robot asking me if I'm a robot? This shit don't make no sense. All right. Jazzy, what's happening in? So yeah, people end up trading bigger before they actually think better. You see what I'm saying? So now, margin is not necessarily the cost of the trade. It's just the amount that you need to have inside your account in order for you to actually control the contract. So with only a few $100s, you might control something worth hundreds of thousands. This is power, but it's also danger, because the market don't give no fuck about what you deposited. You understand? The losses that you take, they are based on movement. That's it. Not on what you put in. So somebody can deposit $500 and still lose it fast if they disrespect the risk. Take small wins like Jazzy just said. Literally. All right. The movement is constant too. This shit is constant. I'm on a 1 minute time frame, so you really not seeing it. But yeah, this shit ain't stopped. It ain't stopped. It's moving nonstop. I mean, I don't want to. I'll come down to a 15 seconds. So I'll give y'all a little bit more action. All right, we'll look at a 15 second time frame. Get them hearts up. Yeah, please, y'all. Tap the screen. I appreciate it, y'all. When y'all do that, it pushes me out to a larger audience. It puts me on the For You page. Really helps me out a lot with the algorithm when y'all tap the screen, press the share button. You know, it might be somebody on your timeline or something, or your For You page, your friends list that want to learn this shit. Don't be a gatekeeper. So check this out. Futures move damn near 24 hours a day. Almost 24 hours a day. So maybe trade a week or so. Jose, you don't want to swing trade futures. You don't want to swing trade futures. If the price don't break below this, we're going to enter into a buy. If it break below this, then I think it'll come all the way down. Yeah, we might be getting ready to go really low. I'm going to go ahead and sell. With no take profit, no stop loss. We're going to do it stinky pinky style. Stinky pinky style. See how I say positions and it's already in the position? So just for a visual, I put this there. I put this there just so I can see. It don't have to be here. I just like this so I can see, you know, what I'm getting myself into. Especially if I got a manual stop loss. Oh yeah, that means I'm the one that got to get out, and there ain't an automatic order there to get me out. I ain't finna play with this shit. You can trade every day but Sunday. Yeah, on futures for sure. See how it's doing it, going up against me? So there should be a stop here. And afterwards I can come here, right click, and say create an order. I can press sell since I'm gonna do buy since I sold right there though. I got 4 contracts open. 4 contracts open. Matter of fact, let me go to what are my orders at? Field, working orders, field, cancel. So we good. It's a futures contract. Any questions? You can trade every day but Sunday. Yeah. Any questions before I continue? So because of that, you need protection must exist before emotion. You don't want to swing trade this shit. See, look at this. I'm down 15, close. We closed that. It's no big deal. I will get back in if I want to. But what I won't do is allow myself to take a big fat ass loss. I can't do that. See, a trade should only go 1 or 4 ways. It should either be a big win, a small win, you understand? A break even, or a small loss. A big loss is not an option. So it looked like it did it here, and it's doing it here. There might not be no big drop. It actually is holding up. This is a heavy level of support right here. The prices, they having a tug of war battle right here. So I'm going to get the hell out the trade just because it's a lot going on. We're going to get out the trade because it's a lot going on. I'm cool. But what I want to teach you is to know when to get the hell out. You know, some people, what they'll do is I'm going to sit and I'm going to hope that the price going to go in my direction. And then they sit and they lose a lot of money with that hopium in their arm. Oh my goodness, get the hell out. Get out. You don't got to stay in that trade. You don't have to do that. You ain't got to do that. No, you ain't got to do that. I'm also want to see if the price going to break above this level for me to take any buys. It got to get up over there. Then again, keep in mind, we on a 15-second fucking chart. So sometimes you got to zoom out. When in doubt, zoom the fuck out. Excuse my French, y'all. When in doubt, zoom out. Now, a stop loss is basically a pre-decided exit point. I'm going to choose to get, let's say I wanted to press buy here. Let's say I want to get in the trade here. If the price comes down here, I'm getting out. If it go all the way up to here, I make money. I make money if the price return up here. If it hit this spot, I'm getting out the trade. So that is called a pre-decided exit point. If the price go here, I'm wrong. I can't stress that enough. Not I hope it comes back. I know some of y'all, like, you said that shit 10 times. I say it 10 more because I know some people in here, it's 33 people, 15 of them got a thick ass skull. That's their head. I'm talking about thick as hell. So I got to say it again and again. The stops are structure. Okay? So futures trading is not about predicting the direction. It's about you overstanding exposure and understanding how much does one tick cost you. You need to know that. How much are you risking? How much are you risking for the biscuit? $69.19, 25. No stop loss. But if it get into this red area, I'm going to get out. This shit is not hard though, y'all. When you only losing a little bit, you can stay in the game long. See, if I was risking a lot, I would have been done. I would be done. I wouldn't be able to trade if I was risking a lot. Because once you take a big ass loss, you're done. How can you want do you unless you just got endless money? You got endless money, then be my guest. Other than that, make it make sense, okay? I can sit here and trade and take a break, walk away from the screen, go and make me a good little Caesar salad or something, come back to the screen. I can do whatever I want. I don't have to sit here in front of the screen and watch it once I got these orders set. But what I like to do is I like to use my stop loss aggressively. So if I'm up like this, I'm taking the stop loss and moving it up to where I get out the trade profitable. If it come back down and hit my stop, I'm getting out with something. I'm not sitting up here watching this shit give me $68 and I don't take it off the table. I don't know about y'all. You feel me? Boom. I don't care. I don't want to wait. We're not waiting on shit. What I'll do is get it off the table. Get it the fuck off the table. I don't care. It might come back all the way up to here, but that's being greedy when you sit and think about, oh man, I got stopped out. It could have did this. It could have did that. That's crazy work. That's crazy work. That's delusional. You got to think about how much does one tick cost when you trade in futures? How many ticks are you risking? How many contracts are you holding? Because when somebody can understand and overstand this, they stop gambling and then they start taking calculated risk. Once you calculate, you can actually slow this shit down, and slowing it down is the beginning of you having discipline. The next, I want to show y'all pretty much. Well, I pretty much just showed y'all how a trade worked from entry to exit and managing the trade. Put a W in the chat if you learned anything since you've been in here. I know some of y'all just got in. I just want to see who been paying attention. Anybody learn anything today since you've been in here? This is Webull. This is the desktop version of Webull. There we go. So look, over here, let's take a look at this screen real quick for a hot second before I gotta go. I can't be on long, y'all, but I will be back on tonight at 11 to talk about the stock market. I figured we'll start doing something a little different and make the background white. Nah, if the background was white, I wouldn't be able to read y'all comments. Or a lighter color, easier on the eyes. Well, that's the thing, Uncle George. It's actually it's preference. You know what I mean? So when you open up yours, you can make the color on your phone or on the computer whatever color you want it to be. This background could be purple if I wanted it to, but black helps the other colors pop out a little bit more to me. I like the dark background. Yeah, this is it. I'm talking about this too. I like the dark background, but let me show you. You can change the color to be whatever you want the color to be. You know what I'm saying? I can make it a white background if I want, but I don't necessarily. I like dark. I like black. All right, so look. So over here on this side, check this out. Let me make the chart small, my bad. Because I want y'all to focus on this. All right, so these are not just buttons. All right, this is exposure. So right now you're looking at the micro E-mini S&P 500 futures. Okay. MES. That's what you're gonna see. So this is the beginner-friendly version of the S&P futures. Remember, it's gonna have the same behavior as the big boy, but you're gonna have less financial damage if you wrong. You're not gonna lose as much. So the price sitting at 6,922. I gotta be fast with what I say because it's just changing, as you can see. So that is a number that is not a stock price. That number is not a stock price. That number represents where the market believes the S&P 500 should be valued in the future. You are trading the agreement around that belief, not the stock itself. Now, I got 5 contracts selected. This is important because now every tick matters 5 times more. Okay? You see where it says right here, quantity tick value 0.25 equals $1.25. That means 1 tick is worth $1.25 per contract, but I'm trading 5 contracts. So now 1 tick is $6.25. So that means if the price moves just 4 ticks, I'm going to make or lose $25. And the futures move 4 ticks fast as fuck. So this is why it's important to use the right amount of contracts, which is what is called sizing. It's important to size correctly. Sizing matters more than you picking the right direction. You see margin used is $664. That means you are being allowed to control something much larger by putting up that amount of money, right? If I did 1 contract, the margin used was $132. I only needed $132 to enter into one of these contracts. Futures, don't never let nobody tell you what you can't do. Don't never let nobody tell you you can't trade futures because it's too expensive. You can trade the micros. You don't got to trade the shit that costs you $5,000 to enter into one. You are controlling a position that reacts to thousands of dollars of market movement with only $132. This is leverage. This is what leverage is. Leverage magnifies behavior. Thank you, Uncle George, for the support. Thank you, Miss Crystal, for the GOAT. And I thank y'all so much for the gifts and helping me get up to 11,000 likes. We got 8 new followers. We got 5 gifters. We got 19 people in the room right now and in class. I appreciate y'all for popping up. And we've had 889 people come in the room and leave the hell out. Them is the statistics that TikTok telling me right now. 9 followers out of 20 people or out of 900 people. This is what I do though. I talk to 900 people just to get 9 of them to, enroll in class and see them again. But it's all right though. Y'all who I do it for. You feel me? Quality over quantity. Now again, that's leverage. Leverage magnifies behavior, not intelligence. You don't make you smarter. Now we're going to talk about right here where it says limit. You see this where it says limit? So a limit order. Who's confused about limit orders? Let me know. I ain't talking to the people that never heard of it. I'm talking to the people that has been trading. You might have took a few trades, but you still confused about limit orders. Okay, Star. I got you. So a limit order just basically you saying, I am only willing to enter this price. I'm only willing to enter at this price or better or less. You pick what you want to get in at. You not chasing. You not waiting. I guess you are waiting. So you're not chasing, you waiting. How about that? You waiting. You waiting for the price to hit that limit and then you getting in. Right? Where would one use a limit order? Let me show you why you would want to use a limit order. Let's say for whatever reason, I think that when the price gets back up here to this red line, like it did 3 times here, I think it's going to drop when it get back up here to this red line. Since I think it's going to happen up there, and I don't want to be using the bathroom or something when it happened, or I don't know, that's a horrible explanation, but I guess you could use a limit order for that reason, but whatever. For whatever reason, you don't want to be waiting. You want to be ready. You want to stay ready so you don't got to get ready. You see, I got this line here and it tells me 6,924. I come here and put in that exact price because I know 24.57 because I know when the price gets to that limit, I want to sell. Okay, 50. When the price gets to that limit, I want to sell. So I could sell at 6,924. Yeah, I can sell, and it'll put that order there. And now it's right there waiting for the price. So when the price gets up there, it'll automatically enter me into a sale order. I'm just driving. You're cooking right now. I'll give some more. Just a minute. Man, you good, Random. I don't know what the rest of this say. You good, Rand? The Rand? Worried about that, ain't worried about them gifts, man. I appreciate you for engaging. Don't be texting and driving now. Do not be commenting on my live stream while you driving. We do not encourage that. That's scary as hell, Rand. I do not want to be the reason that you get into no accident. But yes, thank you. I appreciate you for the acknowledgement and for the engagement. And T-Man said that's a perfect explanation. Yes, it's the perfect reason to use a limit order. Now, also, you don't want to miss your entry while you're taking your own dump. That's right, T-Man. Now, another reason why you want to use a limit order. If I say I'm going to automatically get in the trade right here, once I'm in that trade, I would have to go into it and pre-pick where I want to put my stop loss. So I don't do single orders like that. I cancel that. I actually want to put a take profit and a stop loss here. And I'm going to use ticks. I'm going to measure it in ticks. All right. I'm going to say my stop loss, I'm going to risk 8 ticks. And my take profit should be 16 ticks. Nah, 32 ticks. Now I'm gonna press sell 1. Let's do 5. Sell 5 contracts. Once the price gets up here, right? I'm using a limit, not a market. You do market, that means it's gonna get you in right here wherever the price is at right now. Limit, you get the pick. And I picked 69.24. I picked 69.24 as my price. 69.24.50. Let's say 75 to be on the safe side. And then I got my take profit, stop loss, all that shit already set. Boom. I'm in there now. That trade is not even, it ain't even open. That trade is waiting to happen right now. Look, I got my entry. And if the price gets down here, I got to get ready to cancel that, because what this is an order that's sitting there. That's a buy order sitting there. So if I don't get in the trade right here, right, this is an open at. And then these are stop trades. But when you trading on them prop firms, which I know a lot of y'all will do this and then realize that, forget that these is orders. So then this will put you in a buy order. Be careful. I get the hell out. I know that probably just confused some of y'all, but listen, I use that limit order to create this whole trade for whenever it happened. I'm ready. I stay ready. I don't got to get ready. So I'm gonna move my take profit out the way just in case. I don't want that shit. I don't want it to hit it right now. I need the candlesticks to come back up, get me in the trade, and here's my stop loss. Here's my take profit. But I was just giving you an example of how to use a limit order. That's not something that I would do. I don't just guess. I don't like predicting. I like confirmation. I want to see the price actually go back up there before I get into that trade. I'm not just about to blindly get into some shit. I don't buy in the middle of support and resistance. I don't. Like, let me show you about that too. Support and resistance is important to pay attention to, of course. So I'll come here. I'll go to a horizontal line and I'll mark support. So the price has been bouncing inside these two lines. It'll come from support and go up to resistance, come down to support, go up to resistance. It'll come back down to support again. And if it does not drop below support and stay below support, it'll come back up to resistance again. So when it gets down here and it don't break below it, I'll press buy and I'll take it all the way up to here and get the hell out. Or if it come up to here and don't go above it, I'll press sell and take it all the way down to here and get the hell out down here. T-Man says it's very helpful. I'm glad it is, T-Man. We just hit our mark. I like to make sure I get at least 1,000 views a day. And I got 11 followers. If 10 more of y'all hit the follow button, I'll stay on a little bit longer. If I can't get 10 people to hit the follow button, y'all, I gotta go, and I'll spin the block 11 o'clock p.m. tonight. All I need is 10 more followers, and I stay on a little bit longer. Yeah, it's you explain this very well. Thank you, Star. I appreciate it. I appreciate that so much. You know, a lot of people know how to trade and they can help you, but everybody's not teachers. I'm a Tomoan Khan. Chief, we the master teachers. So we have to teach. Have to teach, man. This is what I do. I love teaching. And Einstein said if you can't explain something that's complicated and make it simple, you don't really know it your damn self. He ain't say it like that, but you know, I put it in my own words. But yeah, so all right, well with that being said, only one person followed, and everybody that hit the follow button, feel free to inbox me. All right, I got you. I would answer. You can pick my brain. We're gonna chat it up, and you might be eligible for my course. Okay, so inbox me if you are serious about learning more. Okay, if you want to learn more, inbox me. I'm gonna let y'all go. I'll be back on tonight. We're gonna do the stock market after the market is actually closed. I'm gonna wait till about 11 o'clock and we'll talk about that tonight. What to expect going forward. All right, y'all. We're gonna make today twice as good as yesterday and half as good as tomorrow. Y'all ain't gotta go home, but y'all know y'all gotta get the hell out of here.